Your focus on the Bank of England today, what's guiding your thinking as to just how much hiking we get? Because, of course, we've seen Threadneedle Street hiking before the Fed, but not so much in one go.
Yeah, you're quite right. The Bank of England is ahead of the Fed and certainly the ECB in this cycle. What's interesting to me is the potential read across from this decision to the other markets as well. And maybe there was a small read across from the RBA already this week. So the QT, or the active QT that we get from the Bank of England, is very interesting because this has to be done with a negotiation with the buy side, with the investors. It's very different to QE. QE was really an operation that went through the banks. So it'd be interesting to see what kind of numbers they're going to come up with. And as you said, the speed will be very interesting. The other thing is that it'd be nice to get some guidance on that longer run equilibrium. The Bank of England's been very candid, in recent months. And they take a lot of risk doing that because by being so open, sometimes they can say things to upset some cohorts, but I'm looking forward to the comments that come after the big decision on rates.
Yeah. What do you mean? What kind of detail would you look for then, Stephen, when it comes to that, the thinking about the long run equilibrium? We talked a little bit about that in the US context, but what are you looking for in the UK?
Well, we haven't got an official print like we have in the US. So it's through using the SEP and the dot plot, which gives you that longer run equilibrium, or the median level at least. And you can see the trend of that in the last 10 years. We can use other modelling to look at how that might have evolved going back 2 or 3 decades. The Bank of England doesn't actually publish that, and obviously there's a very wide confidence interval around these numbers, but again, it'd be interesting to see the guidance because it does matter to today's move, because how far above that level does the Bank of England really want to go? Because the more they go into restrictive territory, then the more they might have to come down eventually in a year or so. I always say the same thing: if it's so obvious that you're going to over tighten and then have to cut afterwards, don't tighten too much in the first place. And so again, it'd be interesting to see how that one's framed today. Clearly, with the inflation print where it is, the Bank of England has to sound hawkish, and they're well served by the media and the analysts all speaking in a hawkish theme as well. So I think they have to keep that message out there. But again, it's a bit of a game, isn't it? They want us to believe that they're hawkish and extrapolate that into the valuations. But at some stage, the bond markets ask questions. How far are you really going to go?